Hi, welcome to Neppy Invest. So, over the past 5, 6, maybe even longer, retail sector has been much maligned in Australia. And a lot of people have been thinking Amazon is going to come over here and completely disrupt the retail sector. And there was just no growth for retail companies on the ASX. Now, over the past 8 or 9 months, we've definitely seen a bit of a shift there. In fact, a lot of the stock prices, or if you look at a chart of any retail companies, we see really positive, healthy uptrends starting. And that's a sort of a sign that all is quite well in the retail sector. And we've got proof of that now. Since the start of January, we've seen a flurry of really positive trading updates from retail companies. It seems like every single day, another retail company is giving us an idea that they've had significant growth in revenue, profits, and other stuff, especially online sales. I'm going to talk about why ASX retail stocks are booming right now. And right at the end of the video, I'm going to give the ultimate respect to Super Retail Group because what they've done is, I think, a great thing, and I'm hoping other retail companies follow their lead. So first thing I'm going to show you is November retail sales from the ABS, Australian Bureau of Statistics. So this data was released on the 11th of January. So this is just looking at monthly changes in retail sales going back 2 years, also year-on-year changes. You can see pre-COVID-19 levels, the month-on-month changes in retail sales wasn't that much, always less than 1%. And year-on-year growth in retail was around about 2 to 3%. So nothing significant there. But since COVID-19 has struck our shores, we've seen significant changes to the way we spend. I think a lot of that is because we're stuck here and we're just spending our money we would have been spending if we were traveling overseas. Now, November 2020 numbers were quite interesting. We saw month-on-month increases in retail up by 7.1%, which is a significant increase, and year-on-year increases of 13.3%. And we compare that to the usual 2 to 3% increase in retail sales, that's quite significant. And that gives a bit of a clue why retail companies' share prices are going through the roof. Now we can break it down even further and see where we're spending the money, especially in November. So in November, we're starting to spend our money more and more at clothing stores, footwear stores, and department stores. Both of those up 26.7% and 21.1%. We're not quite spending as much money at supermarkets. That was down 0.3%, but there is a reason behind that. I'll get into that in a second. But every single sector in retail is up month on month from October to November. So we're spending more and more money at retail companies. Now this is just looking at graphs going back 2 years, and you can just see spikes and troughs in where we're spending. So it just shows you our spending habits, or how our spending habits have changed through COVID-19. And this all makes sense. This should, if you don't understand this, there might be something wrong. Now, if you go back to March and April, it just makes sense that COVID-19 really caused a bit of a panic to the way we're spending our money. So everyone was going to supermarkets, stocking up on supplies, stocking up on their toilet paper, and that's where you see a bit of a spike in the supermarket sales. We also, conversely, at the same time, saw a bit of a trough in clothing sales and apartment stores. No one was buying clothing, no one was going to department stores, so we saw a bit of a trough, a weakness in the sales there. But then since all those stores started opening, department stores started opening, we started to see an increase in sales. And in fact, the last 2 months, in October and November 2020, we saw a massive spike in retailers' numbers of clothing stores and apartment stores. Now, if you go through every single sector except one, we've seen significant increases in retail spending compared to pre-COVID, except one again, and that was cafes, restaurants, and takeaway food services, which quite hasn't got back to pre-COVID-19 levels, but is getting very close to reaching those levels. That's the one on the bottom left there. But every single other sector, we've seen significant increases in spending. And I'll get into the reason why in a few slides. Now, we've got proof of this even in where the job gains and losses have been, which sectors have been since the COVID-19 started in February 2020 in Australia anyway. And we've seen the greatest amount of job gains has been in the retail sector, up 46%. Public administration and safety is second at 45%, and mining is third at 25%, which is sort of validation of thinking that we are seeing or starting to see a bit of a commodity boom right now. Where have the job losses been? Well, again, that makes sense that the majority of the job losses have been in accommodation and food, down 97%, manufacturing down 69%, and healthcare down 43%. So again, we've seen retail sector just starting to employ more and more people because we're out there just spending more and more money. Now, what I've done here is just gone back through every single, not every single one, but a few of the retail companies' trading updates since the 5th of January. Nick Scali was the first one to release one. Then we've seen further updates from Shaver Group, ARB, Premium Investments, UNI, which is Universal, Michael Hill Jewelers, JB Hi-Fi, Super Retail Group, and Global International. You can see significant increases in profit after tax, revenue, and earnings before interest and taxation. They don't all report the same thing, what's happening, but you can see significant increases in all of them, especially profit after tax and earnings before interest. And one of the reasons why we're seeing significant increases in profits and earnings before interest and taxation compared to revenue is that the increase in online sales, which has higher margins or significantly higher margins than, say, the brick and mortar store. So if you ask every single CEO, every single one of these companies, they would want us to spend more online compared to bricks and mortar because that's where the greater margins are. Now, when you compare it to the ABS November numbers in each sector and compare that to the revenue, you can see very similar numbers there. So every single one of these, you can just, it's shown based off their ABS numbers. So any of these companies, CEOs who is patting themselves on the back for doing a great job, not really. It's just what's happening in the broader sense of the market. And lastly, you can just see the share price increases based off these trading updates. We're seeing significant share price increases. Universal Group was up 14.4%, Global International up 34.3%. The only company that was down was Super Retail Group, which was down 1.2%, which is unfortunate because actually that's the announcement I liked the most, just because what they did with JobKeeper. I'll get into that in a second. Now, this is just looking at graphs of all these retail companies going back 6 months. You can see just the same trend in all these charts. It's all going from bottom left to top right. Significant, healthy increase or uptrends right now. So everything's looking good for retail companies at the moment. And right now, I'm just going to take a brief look at Global International. And the reason I'm looking at this is because I just went back for the half-yearly numbers just to see how it compares this half year to previous half years. And there's a bit of a warning here. So they've increased their revenues by 60% compared to the previous half year or previous year last year. And the EBIT's increased from 4.2 million to greater than 20 million. Now, I don't think this is sustainable for the long term. You can see the trend here from Global International in their revenue has just been slowly upwards, and there's just been an explosion in one half year. I don't think that's sustainable. I want to get into that in a second or so. But the market hasn't agreed. It's just seen the market cap just shoot up because the expectations that this is going to be sustainable, I think, is there within the market, and I don't think it's going to happen. I think there's going to be some disappointments in a few years because I think there's a good chance a lot of these revenue numbers actually will go down. So this is the reason why. And this is just my opinion. I could be wrong. I think we've seen a shift in spending habits over the last 9 months, and I could use my own personal experiences as sort of an example here. So for me, I had planned a 2-month holiday overseas last year in September, October, November. So I was willing to spend, $10,000 on overseas hotels, plane trips, rental cars, that sort of thing. So instead of spending that $10,000 overseas, I've actually spent that money here. I've actually upgraded my fridge, bought a new oven, and I'm actually thinking of buying a new couch. I don't really spend my money on clothing, but I'm thinking of spending more money on running shoes, that sort of thing. So I think there's been a shift in spending habits. So a lot of people are in my shoes, not literally, but they're spending the money they would have spent overseas trips, they're spending that on retail in Australia. So a bit of a shift in our spending habits. Now, you might say those tourists, those travelers here, instead of spending the money overseas, we now lack the tourists coming from overseas and spending their money here. But tourists from overseas would spend their money a little bit differently than what we'll spend their money domestically. So they'll spend their money at more touristy places. You can see the job losses in tourist or accommodations down 97%. So tourists from overseas here will be spending their money on hotels, spending their money on doing touristy things. They wouldn't be spending the money on buying clothes, ovens, fridges, that sort of thing. So you just see the shift in the way we're spending the money. Another thing is I think a lot of people are bringing their spending forward. So they may be planning on doing home renovations in 2 or 3 years. And instead of doing those home renovations in 2 or 3 years, they're doing that now, which means in 2 or 3 years, instead of doing their home renovations, they'll have more money to maybe do an overseas trip. So I think there's a chance we're going to see suppressed retail in 2 or 3 years when people are traveling overseas more. So instead of spending the money domestically, they're spending the money overseas. And we've got tourists coming over here, spending the money at hotels, spending the money on touristy things. So I think there's going to be a shift back to the way it was in 2 or 3 years. And the whole question comes back to, when will traveling overseas become viable, or when will it return? And that could be, maybe a year's time, but I definitely think in 2 or 3 years it will definitely be back. And the question is this a short-term hit, or how long can this increase in retail spending occur? Some might even say we've seen stimulus helping to increase the retail spending, but I think it's more just our retail habits have changed, or retail spending habits have changed, because we're spending less money going overseas and spending more money domestically. And finally, I've got to give a lot of credit, a lot of support to Super Retail Group, who have given $1.7 million back they received in John Keeper Way support back to the Australian government. And hopefully other retail companies will follow their lead. They don't have to. Josh Frydenberg has even said that they really don't have to. But it would be a good look if they gave that money back, especially since each and every single retail company has experienced record profits over the past 6 months. So it just looked really good. So anyway, that's why retail stocks are booming right now, why retail sales are booming in my opinion, and why I have to give the ultimate respect to Super Retail Group, because they've done something great, I think, and hopefully other companies will follow their lead. That's all for this video. And again, I'm not a financial advisor, so if you do need financial help for your own financial circumstances, make sure you seek out someone who is qualified and can speak to your own financial needs. That's all for this video. Have a good day. Bye.